Hello, hello all. Coming back. 2 minutes. What's up, my traders? Are you ready? Doesn't seem like a sell USD yen. Okay, let's see. To be honest, I don't see any big move now, because if Powell was to be hawkish and aggressive, I would expect at least 1-2% down in S&P. But it's just trading very, very narrow. Also, I don't see any pressure to the dollar. Still euro trading above 98.50. Same for pound. We didn't even take yesterday lows. I don't know what you think, but maybe we see some big movement, big pivot. I don't know. Also, dollar, okay, it is consolidating just above moving average. Also, you see the alignment here, both moving average are touching It's like one. What the fuck is going on? Very, very strange. Look this alignment. I have not seen this too often, okay? And it is 4 hours chart. You see one moving average perfectly touching the other for since yesterday. Also, I don't see euro out trading higher. Usually euro out is a risk off trade. So if we see big move down in the equities, we see euro out rallying. It is very, very strange situation. Okay, I know that every big event, the last at least the last 1 year, it is very, very strange, and it doesn't feel different this time. But I cannot see this. Look this chart. We must see a big disruption if this is going to be bearish. For example, I must see closing below 30,000. It is 2,000 pips rally. This is 6-7% down. This trend cannot reverse easily, guys. Okay, dollar maybe it's easier because we already having one first leg or wave, call it whatever you want, but why not this be the second wave? We have the first 1, 2, or A, B, C. It's not easy things to know in advance. I mean, even crypto guys don't know what to do. What else? Of course, GBP yen, GBP USD, it is trading down now in the lows of the day, but since still it is above yesterday or weekly. What was this? Yesterday's low. Very strange. No indication from yields too. Yields are trading like a flat line. What do you mean if I take live trades? Of course I trade live trades. Or you mean live trades as we speak to present you? Yes, I trade in my other monitors. You don't see them. You wanna see them? Actually, this will be another project that I am thinking to start trading an evaluation account in funded tradings. This is one big project I would like to do with some not all of you, some I want to make a team and trade together. But I'm still organizing. I don't know how I'm going to implement this. This is silver going down. Let me put 30 minutes chart. But even silver in the 30 minutes chart, it's not bearish. We have the cross in the moving averages. and trading above yesterday low 1948. Same for gold. And everything points to a dollar fall, but okay, this is 30 minutes chart. We have mixed signals. For example, dollar here moving average is pointing to a move to the upside, but if we put 4 hours chart, we see this alignment here, something is waiting. Of course, the daily chart is bullish, but we have had one breach of 110. This move here in a way disrupted the higher lows, this trend. That's why I'm telling you something, at least one big consolidation is coming, if not big reversal, to test 104, this low here. It's getting interesting, very, very interesting. If dollar breaks 112 today, you think a double top with mild September is possible? 112 you mean this one, 112, okay. Depends on how much Powell gonna push markets. I don't believe we are gonna. I think the top is in the dollar, as I said. Okay, it was an impressive rally, almost 1.5 years. I think it's time for a pause and consolidation, and even if we test 107, 108 or 104, still the trend has not changed, but I see the need for a correction. Everyone needs this, and it is healthy. I'm not talking about the stupid dollar crashes calls that the broken clocks of crypto Twitter, you know, those guys are keep the perma dollar bears are calling. They still expect dollar to go to 70, 80, 90, bullshit like that. Okay, this is not gonna happen. I'm just seeing a correction in this steep upsloping curve of the dollar. The impressive thing is the pound. It stays up here for too long, I think, because they did nothing more than kicking the can. Okay, truce gone, the new India boy wonder came, he's ex-Goldman, but he's not a magician. What he do? It's very fragile. The situation is very, very fragile. Yes, real Greek. Yes, it is little smoke, just a cigarillo, not. Actually, I'm going after the event to smoke in one cigar lounge here in Athens. But we see. Maybe we have big trading volume after the event, and I will stay here. So tell me, the chat, what do you believe? The pound, yes, I would like to short any spikes to the upside. This is gonna collapse sometime. They have a few days, 2 weeks left until 17th of November, where they are gonna present the new fiscal policies. And until then, okay, the pound can feel a little bit soft. I mean, moving to the upside. What do you guys think about today? Are you long dollar, short dollar, long equities, long BTC 30? This is, this is suicidal, because if you go long BTC 30 times leverage, this means that with 3% you get a margin call. And 3% for Bitcoin, it's just a $600 move. Winter is coming, yes, I agree. That's why I like oil. Oil is ready to break to the upside. I have big convictions about this trade. I don't know how this is still trading below $100. Long put February 23 on the S&P. At what strike you are long put? $3,500, yeah. Yes, this level is critical. 3,500 is critical. Below there, we can see big move to the downside. If we see move below 35, we are gonna test levels below 3,000. No, the strange thing is that Euroud keeps falling. I would like to buy any dip towards 153, this area here. Those levels are previous resistances that became support now. You see, we are going back to pre-war levels in Euroud, you see. Okay, dollar is trying to break to the upside right now. Let's see. We still have 1.5 hours before and 2 hours before Powell's speech. This is possible, yes. I expect a dip in S&P and a spike in dollar. This is normal. Everyone is bullish right now in rates. But I don't see this having so much effect that we had after Jackson Hole or CPI numbers. Also, we have the payrolls tomorrow that may be used as a break to any further move to the upside in the dollar, because okay, at some point they are gonna turn lower. We have had a lot of move in the employment data to the upside. It's time for a pause. But yes, I would like to buy any dips in equities. Actually, I'm looking Meta. I know, sounds crazy, because this has this huge runaway gap down, but I believe this is gonna be tested or closed, call it whatever you want, at some time. Look what is going on in Facebook. We are trading at 2016 levels. For example, if you put S&P the same chart, is the equivalent of 1800. Also, another stock that I like, this is extra bonus now, it is Intel. Intel, it is trading in a P around to 5, I think. It's very, very cheap. What is this now? And trading also at 2015-16 area. I believe it is one of the most oversold and value stocks you can have right now in Nasdaq, if you know anything else. I mean, from a fundamental perspective, okay. Also, big 25 is big support. It is the low September 2015. Who care about JOLTS and ADP? ADP, it's the indicator with the biggest variance, volatility. I think it is 50, 60,000 up and down. It's nothing. When I was trading in the bank, we didn't care about JOLTS. We didn't even monitor this fucking number. Come on, guys. Okay, PC... it's not so important as CPI. Not to mention about jobless. We didn't give a shit about jobless number every Thursday. But now I see a lot of retail traders, and they are paying attention to every US news. You must screen. For example, besides payrolls and CPI and GDP, maybe, you don't have to, okay, and ISM, you don't have to look anything else. It's 4 or 5 indicators that you must monitor. Who the fuck gives a shit about Philly Fed and New York ISM and bullshit like that? Nobody cares. What did Powell said about JOLTS? Listen, my view on fundamentals is the following. Generally, news trading. Besides the short-term volatility, I believe that every asset, every market follows the trend, that the underlying trend. And to be honest, there are many analysts and quants that have many PhDs and experience and use every econometric model that you cannot imagine, and they cannot forecast everything. It's everything in the charts, the price action, because price action cannot hide the trend. For example, let's take Intel that I have here. Okay, look this trend, this developing trend back to 2009. We have higher high, higher low, higher high, higher lows. This trend, you cannot go wrong. Just two moving averages, and look how much profit you could have made. You could have tripled your money. Okay, who cares about fundamentally, especially this chronicle area was dictated by many crises, European crisis, defaults, government boards, haircuts, but market didn't care. Money was flowing in, central banks were printing money, and this suddenly stopped last year, and we have had big liquidations that are making a shift in the trend. And okay, in macro level, when you have coordinated central bank raising rates and trying to stop QE or even turning to quantitative tightening, we don't have, we yet have to see this. Yes, you see, you are CFA holder and CMA, so fucking what? These are worthless. This is just to work maybe in PricewaterhouseCoopers or in McKinsey if you are a little bit more smart, or in any finance analyst department, but you cannot trade market. To be honest, to trade markets you don't need any degree. You just need good psychology. Okay, of course, good feeling for the markets, know what is trading, what this asset means, and you should implement basic macro analysis. For example, rates going up, stocks are correcting. But okay, even in this environment, it's very tricky because stocks are in a way an inflation hedge, because you get a dividend and okay, it is an asset, and every asset goes up in an inflationary environment. For example, look, gold. Gold, despite the sell-off in stocks, in the back in the old good times when we have had the risk off, gold was rallying along with bonds. Now we see the opposite. We see risk on gold goes up and risk off gold goes down. This is not normal. Fundamentally, it's not normal. Okay, I know you hear about margin calls, need to cover, so they sold gold. You really cannot know every time what is happening in the markets. The market dynamics are so complicated. That's why I have decided just to monitor price action, because you are getting confused if you try to follow everything, every news, everything that you see in analyst reports. You cannot For example, let's take another big bullshit is the reports that analysts do for stocks, for rates. Give me one analyst that had something correct. For example, you could see, let's say, Meta, Facebook, many reports. Oh, price target for Facebook is $150, $200, $70. Who gives a shit about this? They just put some models, some numbers, and they get one number. But in order for market to go there, needs real money, not just an Excel, a model in Excel or in Python. I don't know what they use, and they make forecasts about price. You must follow the trends because this is the only real driver of the price, the underlying trend. And okay, I say I'm buying Meta stock. It's just fraction, nothing. For example, okay, I say I buy 10 stocks. Who gives a shit? It's nothing. It's not, no position. Okay, if I wanna make a position, I will buy 1,000 stocks, not 5-10 stocks. This is nothing. I'm just tipping to see it appearing in my portfolio, so I can monitor easier. What I would like to buy for my investment portfolio is a 10-year bond, a 10-year treasury, because I think that yields are ready to reverse. They are topping. We are very, very low. Even Wanda doesn't quote this. Oh no, they have it. We're approaching levels almost 20 years before. 2009, 2008. Yes. Okay, when I started trading bonds in the bank, it was October 2005. Was here near the lows. Okay, the yields were about 5%, I think 5.50, something like that. And then the crisis came and we saw yields going negative. And now we are back to normal levels, because all those years it was abnormal to have negative yields. Come on guys, be serious. Do you understand? Before 20 years it was a joke. Let's say to see bonds, German bonds trading negative. This means that the German government would get yield, interest for making for getting your money. You were paying the Germans, and then the French and many European governments. You were paying them for 10 years just to give your money to them. It's insane. It is insane if you think about it. So this created a huge bubble, and now we are facing the consequences of this. But if you think about it, to get a loan, it's like getting a loan and get paid interest instead of paying. This is abnormal. This is abnormal finance. That's why now Germans are gonna pay for this, are gonna pay hard. Okay, tell me what else you want to see, what chart? Bitcoin is flat line. I don't know what it's gonna do today, but I believe we're gonna see lower levels. Yes, currently it is raging. Also consolidating this, you can say it is a bull flag. So maybe we see a break to the upside if we see dollar weakening. Speaking about the dollar, okay, I expect this to roll over. Let's see, maybe we touch 112, 112 something, but it's very tricky because nobody knows how much Paulson gonna press markets. Yes, crash, mini crash. GBP out short. No, I disagree. I don't see any short trade here. This will break higher. At least the chart dictates, okay. But okay, yes, depends your time frame, because in the weekly it's not so good, but yes, also daily shows that it wants to go lower. But depends your time frame. The 4 hours chart is buying any dip and then expect move above 180 again. This is all about the AUD. AUD is lagging so far, and we can see that also in AUD crosses in Euro AUD, for example. Okay, someone would say, okay, this is a wedge, but wedges also break to the downside. Yes, I agree. If we see a big move, a bullish move in stocks, S&P, that currently it's making new lows, your AUD will fall, correct. Yes, the fucking dog. It's from a house, I don't know where. The neighborhood. I have the windows open because I smoke. Fucking dogs. Yes, now that you told me, it's irritating. Oil is rallying. We break $90 as we speak. Interesting. Yes, dollar getting higher across the board. I see that. But still, I'm expecting one price rejection candle to see for the reversal, because I don't buy the dollar rally. I think we have seen the top. Okay, let's see another time the charts. Euro, it's trading in the lows of the day, and I believe we're gonna see the break new weekly low below 98.50. Let's see. Same for cable. We're gonna break 114.40, but this means nothing. I would like to see bigger moves. For example, taking out 112, 113 easily in cable. If dollar is so strong, I don't see that. Same in AUD. AUD should trade below 63.50. Okay, S&P, plenty of support here. Moving averages, previous lows. 3800 is critical. I don't see how this can turn too bearish. I believe we're gonna see a buy the dip and a relief rally to the upside, to new highs. New Zealand dollar also, you see, this is a little bit more bullish than I would. Parity for Swiss franc. Okay, silver is correcting, same gold. Yes, USD Japan is very tricky. Better don't touch it. Okay, Bank of Japan put the threshold at 150. Every time that the rate approaches 150, they go out and selling dollars and buying yens. So I don't believe we're gonna see easily a move above 150. Also, I don't see any case for further sell-off in the dollar yen, because 145 and below have proven very strong supports. Even with two previous interventions, we couldn't break 145, so why to break now? Nothing has changed in the policy of Bank of Japan. Let's say USD CAD. It's interesting because you know, USD CAD is multi-factor the price. I mean, you must check equities. If equity is going down, this gets a bid. If oil goes down, this gets a bid. Now oil going up, so puts pressure to USD CAD. Stocks are going down, so putting negative pressure to the upside. And of course the dollar going up, so putting pressure to the upside. We are trading inside a big range, 135 and 138, 50, 39. I don't see case for a reversal much lower here. Okay, I expect oil to rally, so this will put a bid in CAD, but it's very tricky. Okay, 5 minutes more, then I close it. If you wanna see something else. No, I don't believe that Powell is worried about Japan selling treasuries. All the world is selling treasuries, who cares? It's normal now with rates going up. The only problem with raising rates and being hawkish is the housing bubble, that because you know, every time the rate goes up, your mortgage payment goes up too, and after some point it's getting very fragile. Every central bank is worried about this. Aussie dollar, I said earlier, I don't know if you were here. So far it's trading bearish. I don't like it. Of course, there is plenty of support below, but moving averages are bearish. For example, look at euro. We have a flip in the moving averages despite the breakdown. This means that you could buy the dip if you see any reversal indication, something like that, big spikes in those candles, like those candles. Okay, for now it is rule number one. If you see the Trade Like a Pro series videos in my YouTube channel, but I suggest everyone to see those 4 videos. I need to update them sometime, I will. We never buy in a red candle and we never sell in a green candle. Okay. This simple rule will save you a lot of money. Of course, I will trade Forex. I'm looking to fade the extremes. I would like to see one big move to the upside in the dollar, meaning what I said actually in the video this morning. I would like to buy. I said the levels in the video. After we close the live, go see it. Those that you haven't. I have pointed out some levels that I would like to buy euro, because I see a reversal to the upside to test parity again. And of course, if we see some hints of pausing or pivoting, we can see big rally. Okay, I must answer this. Sorry. Okay, I'm back. Can you hear me now? Okay, guys, I'm closing the live. It's just 1 hour before the party. Okay, if something happens big, I will update in Twitter as always. Okay, bye all.